This is Don DeBartolo, a senior commodities broker and market strategist with Daniels Trading in Chicago. I'm also the trader behind the Trade Spotlight advisory service. Trade Spotlight's broken into three segments: Trade Spotlight Futures, Commodity Options, and Futures Spreads. This video is beyond the spotlight that will spotlight two or three markets that may become trading opportunities for this week. This week begins with Monday, October 19th, 2020. Please pause the video and read the disclosures to understand the risks involved with futures and commodity options trading. Jumping right into our first chart, this is the December 2020 E-mini S&P. Okay, there's an active trade recommendation in this market right now. If you're following the Traded Spotlight, you should have that email in your inbox. Last week, I put out an order to sell the contract on a break of this low, and this is that session low is the 15th of October. So that was Thursday's low at 34.31 and a half. What we have here is a 1, 2, 3 top formation. The number one point is the 12-month contract high. The market retraced down to the 89 moving average, created the number 2 point near a support level, rallied but did not take out the 12-month contract high, and then started to sell off, setting up the number 3 point. So with momentum as strong to the downside as it is, this is my stochastic indicator, I'm looking to sell a break of this low using the momentum entry technique. The 1, 2, 3 top formation is a trend reversal formation. Right now you can see the MACD, which is a trend indicator, is starting to turn bearish, but it's still in the positive territory right here. So perhaps it will take a break of this low to flip to a downtrend. There is a 20-day and a 50-day moving average right below that level. In fact, I don't want to see the 20-day moving average break this 50-day, because that's usually a bullish signal, but hopefully those won't cross over on that breakout. I set up this trade as a day trade though, so what I'm looking to do is sell the contract, and then by the end of the trading session, liquidate. Before the end of the trading session, liquidate the position. So there's market on close order, or if you want to give yourselves a couple minutes to liquidate the position. This way we don't take on any overnight risk or the hefty margin requirement that comes with the E-mini S&P. I believe it's $13,200 at this time to be short or longer short the futures contract. But by setting up a day trade, the margin requirement is just $750. The stop loss, though, will be in place, and I'm setting that at $3,446, which is a risk of 15 points or $750. So that's not a high or any support resistance on the chart. That's just a dollar amount that I'm posting $750 margin. I'm willing to risk $750 for a potential breakout and continuation to take a profit. So this order is working as a day order. If it's not filled, it'll expire, and I'll put it back in for the next trading session. If you have any questions on that, I'll have all my contact information at the end. Feel free to reach out. So that's the December 2020 E-mini S&P. Okay, the next chart I want to take a look at is the December 2020 Canadian dollar, and lo and behold, another 1, 2, 3 top formation. So the number 1 point was made when the 12-month contract high was made in September. That high is 76.97 on September 1st. Market retraced back down to an 89-day moving average, found some support, bounced, traded up to set a new high but not take out the 12-month contract high, so a new recent high at this number 3 point, and then is rolling over again. This is Thursday's bar. There was a big sell-off, and it bounced off a 20-day moving average. So I'd like to see a break of that session low, which is 70 75.42 on October 15th, and that 20-day moving average, 75.37.8. So I want to see a break of both of those levels before selling the contract. We do have momentum to the downside. This is the stochastic indicator. Checked up a little bit on that Friday session where we saw an inside day, market bounce up a little bit higher, but overall the momentum is still down. The MACD, the trend indicator, sets up very similar to the E-mini S&P. It's waning, it's starting to turn over. Perhaps a break of this low, we'll see the trend flip to a downtrend. So this one is pretty close to being set up. In fact, we can probably send out the trade recommendation to have that order working for that breakout. So keep your eyes on your inbox for a trade in the December 2020 Canadian dollar. Stop losses would go most likely above the number 3 point, and I'm looking at the 73 area as a potential support level and target. And the last chart I want to take a look at today is the January 2021 soybeans. I had this chart on in a recent video, but bringing it back. What we have here is the beginnings of a head and shoulders formation. So the left shoulder was put in on this pivot point high in the middle of September. That high was 10.50 and a quarter on September 18th. Market sold off down to the support level, rallied off a fundamental report, created a new 12-month contract session high that comes in at 10.77 on October 9th, and then has pulled back a little bit, even though you can see after the sell-off, after the report, market traded pretty much near that closing price from this session here. But we had a sell-off day on Friday. I do have a lower trend line drawn off. Perhaps the market comes back into here and tests it one more time. But I'm looking for a right shoulder to be established. So in order to do that, the market does have to sell off. Perhaps it can get down to the $10 9.90 support level and then bounce back up higher, back into this 10.50 range to sell the contract or set up a put spread for a longer term strategy to the downside. In the short term, you can take a short order on either a close or a break of this lower trend line, see if the market doesn't trade down to 10 or 9.90, because that's potentially 30-40 cents of potential profit, and then ride it back up on a long entry back to the 10.40, 10.50 level. So you can be very active in the January 2021 soybeans contract. Right now, you can see the trend is well over the positive level, but it just turned, and now you're starting to see a tick down with the MACD. The stochastics indicator, this is the momentum indicator, it's pretty flat right here actually, which, you know, the market price right now at 10.50. Well, we've been trading at this level here going back to mid-September with just some violent ranges in between. So hopefully the momentum is in line with whether you're taking a quick short-term short entry here or waiting for a bounce off this level, momentum's hooked back up. But overall, when the right shoulder is put in place, I want to see momentum to the downside. I want to see the trend indicator to the downside, these moving averages starting to hook over. You're already seeing it with the 20-day moving average. So we can take a nice longer-term position in the soybeans market. Quick look at what the trade spotlight looks like. This is the email that's sent directly into your inbox. You'll get a write-up of the trade, their precise entry order, and stop and target or risk reward if it's an option trade. Any pertinent information like expiration dates or open interest, and a chart that you can click to enlarge. If you want to follow the trade spotlight, I offer a free 90-day trial. Just go to danielstrading.com, click on Advisories tab. Under Technical Analysis, you'll find the Trade Spotlight. You can read more, see some recent posts, and subscribe for that free trial. If you're a client of mine or the firm's it's a free service to you with an open funded account. Here's all my contact information. If you have any questions, especially that day trade in the E-mini S&P, my numbers, my email address, feel free to reach out. Thanks for taking the time to listen to this video, and happy trading.